Welcome to the Pump and Dump channel for this video today on the 15th of October 2019, and I put up this headline question: the day the CNX bears refused to say uncle. So what happened today was the stock price was again pushed down on the open to 707, and it didn't last very long, and then it started rallying, and it rallied all day up to 774, and then it got pushed back down. It went to as low as 734, and it closed at 737 or 738, depending on when you looked at the data. It kind of fluctuates. But anyway, that's kind of what we did on the day. Nice green candlestick. The natural gas price on the day, it was up again, not too strong, but it was still up. Looking, of course, on the technicals, what we can talk about is that trading range that we had been in, that 748 upper resistance line that had held several times, but we bounced against it. We went through that, and then we came back down, and we settled on 738. And if we take here this point in time here on the 25th of September, it kind of is like a support line there. So we kind of had been trading in this range for the longest time, and then we broke out, and I presume that the bears or the shorts or whatever you want to call them, they saw it break out and they thought, oh my god, it's broken up this range here. Let's push it back down to the supports because we think we can do that, and that oftentimes works because after a day of buying up to here, most people who spent their money adding shares all the way up here, they're probably going to slow down at some point in time, and then it turns, and the people who have been selling all the way up, they continue selling all the way down because they want to push the price down with their sell orders up here and their sell orders down here to get their sell orders to about an average of what the day did. That's kind of how I think about it. Of course, I can't prove that, but that's my rational thinking. I had seen it up here at 770, and when it was kind of, when it started going down, but I didn't think we would go below this 760 line here, and then when we did, it's always that way. You think, oh no, the next support kind of will hold, this 748 will hold, and then it goes below, and you then say to yourself, well, if I sell now, I'm not going to buy back in at a lower level because you don't know where the bottom is. And of course, for myself, because I use the intrinsic value to give me guidance as to where I want to see the price going, where I would be comfortable, holding the stock at a given price relative to the intrinsic value. I said to myself, I'll just sit on it and see what happens. I did sell a little bit of stock here at 757. Brought back down my share count to 1100, not because I was feeling bearish, but because I wanted to buy some stock in a different company. I wanted to switch a little bit out of here into that one because I like the short-term outlook for that one as well. And sometimes it's better to have a more balanced portfolio than having 15 or 20% of your portfolio exposed to just one stock. So that's kind of what I did. Not feeling bad about easing up there, given where we ended. Of course, it feels better having exchanged the shares for cash up here, but of course it still doesn't feel great ending down here when we had been up here. So that's kind of where it goes into. Nothing really has changed. I think the intrinsic value has improved a lot because of the improvement in the natural gas price. Of course, in the short term, going into Q3, it has no effect and no impact on the earnings of the company because they're hedged at just under $3 per 1,000 cubic feet for the volume. Of course, it is possible that they produce more than what they have hedged, and then they probably will have earnings above that. So they probably could outperform, but given the conservative approach of assuming that they're just going to produce what's hedged, I would say that this price here is not relevant for Q3 earnings, but it is still relevant in terms of valuing the future earnings potential of the company with its resource that it has in the ground. This kind of plays into looking at fundamental valuation over the long term. If we look at for example, how the shipping stocks did today. The ones that I've talked about, Nordic American Tankers is down 8%, quite substantial, and Tsakos Energy Navigation is down 3.5% on the day. So, as mentioned, it's not just about choosing the right sector; it's also choosing the right investment vehicle. You know, of course, it's down in absolute terms, but in terms of relative performance against Nordic American Tankers, I think that I've proven my point that Nordic American Tankers is more leveraged and therefore more volatile and risky in any kind of pullbacks than Tsakos Energy Navigation is going to be. But getting, of course, back to CNX Resources, we can see the same thing here. We're up 2.79% on the day. EQT is 1.58, Southwestern is 2.53. These stocks here, they were up 5%, 6% at the high here. CNX Resources was up as well, 7 or 8%. Of course, we can compare to our nemesis Antero Resources. It's down 5% on the day. What can I say? I mean, I've talked about it quite a lot. It's an unfortunate situation that the intrinsic value is just not there, and therefore they are going down. So yeah, let's see what happens tomorrow. I'm hoping we continue moving higher, especially if this natural gas price can stay as strong as it is or move higher. That would be good. Of course, if there's a little bit of red here, as long as the natural gas price is above 230, there is no reason to sell CNX Resources at this price here, in my opinion. Not giving you advice or recommendations to do that or to do anything with these stocks. Just remember that I'm just expressing my opinion. You can do with it what you want. If you want to share your comments, opinions, and questions in the comment section, you are always welcome to do that. And if you enjoy this content, you can always subscribe. And I'm going to leave it with that for today, because that's all I have to say. And have a good day.